Good evening, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, the S&P, the QQQs hitting brand new all-time highs. Very nice bullish continuation from yesterday's rate cuts by the Federal Reserve. However, not names were built equal today. We did have some that were pulling back in a very big fashion, others that performed extremely well. So in today's video, since we don't have any news, we'll be spending a lot of time on the charts. Number one, we'll be going through all of our technical analysis on our major sectors, see where the rotation is, see where the rotation isn't, and where we could possibly best position to benefit from some of the gains that might be coming up in the next few days, next few weeks, and next few months as well. Thereafter, we will be doing the exact same thing across our big tech list down here, because once again, not all big tech names are rallying today. Some are pulling back, providing some great entry opportunities, and others will just continue pushing higher, namely Google. So that is going to be in the second part of the video, just doing a quick technical analysis rundown of all these names. Thereafter, towards the end of the video, we'll be looking into the infamous biggest gainers and losers of the day, of which there were many, but the top one here in the green, at least on my list, is Intel. Intel up 22% off of some very big news. The fact that NVIDIA was taking a $5 billion stake in the company, looking to partner on some CPU endeavors. So we'll take a look at that when we take a look at the biggest gainers and losers of the section. Recap the exact news and exactly how it might impact both of those companies respectively in the near term, medium term, and perhaps longer term futures. And then, of course, we got tons of names on the downside. Many very interesting value-oriented names on the downside, having some pretty significant sell-offs today. In my opinion, a bit overdone. Talking about FactSet, SPGI, Moody's Corporation, MSCI. A lot of these names are fantastic companies with insane fundamentals. And the fact that they sell off in a pretty big fashion after FactSet's decent earnings just tells me that, well, the market is providing opportunities all over the place as long as you know where to look. So we'll cover that section at the end of the video. And lastly, since today's video is going to be the last video of the week, I'll be running you guys through my portfolio for some of the trades we took today, some of the trades we closed today, and which trades I am keeping into next week. It's been a very good week for us. We closed some massive gains today on some leap call contracts that hit our targets perfectly, and other trades as well, such as the wheel strategy, has been performing excessively well for us this week. So it's been a very good week. I'll take you guys through it at the end of the video, and that's going to be it. So let's get right into it, shall we? The S&P today up 0.47%, brand new all-time high, and the Qs 0.9%, also a brand new all-time high. In terms of the market rotation, it was pretty good, but you did have some pockets of red. You'll notice here that for the most part, big tech performed well on the day. Of course, Apple, Amazon, and Microsoft pulling back a little bit, but those losses were largely offset by the big push on NVIDIA, Google, and even Meta participating today. Consumer defensives was a bit of a weak point today. Costco is a company that I just continue to accumulate at these levels. Financials also were a bit mixed. The banks did well, the insurance companies did well, but some of the credit card players, namely Visa and MasterCard, down a little bit. You guys know my thoughts on Visa. The company is definitely a buy, at least for me, at these lower levels. Healthcare, not too bad of a day, but mixed. And the bottom half of the market, the interest rate sensitive section of the market, also performing decently. It was a mixed bag because yields were actually on the rise today. We spoke about the reason for that, in yesterday's video as well, where there was a discrepancy, right, between what the market had priced in for 2026 rate cuts. 2025 rate cuts, the market got it right on the nose. 3 rate cuts total, 1 yesterday and 2 additional ones by the end of the year. But the discrepancy was really in the 2026 numbers. The market is currently pricing in between 2 to 3 further interest rate cuts in the year of 2026. However, the Fed, in their summary of economic projections, only had penciled in about 1 to 2 additional cuts. So the market currently is kind of trying to unprice at least 1 interest rate cut, but maybe all the way into 2, which is why some interest rate sensitive names did pull back today, even though we had a rate cut yesterday. I know it might not have been a very obvious move, but that is really the reason behind it. It's just, repositioning essentially, which is going to happen in the short term, but in the long run, these interest rate sensitive names should have a bullish uptrending bias. In terms terms of their one-day relative performance, you can see even better how a bit mixed the market was. Technology, industrials, healthcare really performing well to the upside, and to the downside, sadly, energy, consumer cyclicals, and consumer defensives getting hit the hardest. On the one-week relative, now that we have the rate cuts in check, well, the market is fairly mixed, but I would say balanced. Communication services, largely led by Google and Meta, the highest performers of the week. Technology, cyclicals, energy, financials, not too bad. And to the downside, we still have some lagging sectors: materials, real estate, defensives, and healthcare. As I said, real estate is down here. You would expect this one to rally hard on a rate cut day, but as I said, there's going to be some short-term repositioning, some short-term repricing, just because of the discrepancy of the amount of interest rate cuts possibly coming into 2026. So due to the fact that we don't have any news whatsoever to talk about today, I mean, there's no macro, guys. There's no macro into tomorrow. Into next week, though, you got a few things to keep a lookout for. Global manufacturing PMI from S&P on the Tuesday session, as well as services PMI, some inflation data of those two components. And then nothing pretty much until Thursday, where we get a nice GDP estimate here for Q2, which is at 3.3%. Very solid numbers, nothing to see there. And then in the end, you get a PCE report on the Friday session. 2.9% year over year is the expectation, or at least that is going to be what was last month. This month's supposed to come in line, or maybe even slightly under. We'll see what happens there. But in my opinion, this one is probably also going to be somewhat of a non-factor. We're basically through most of the biggest volatility catalysts for the month already. So that being said, guys, let's jump right into some charts right away, just to derive some price action control. I'll try to get through the indexes as quickly as possible because, as I say often on the channel, nothing has changed. And I may only say that when it's true, right? So nice daily uptrend on the SPY. Higher lows are set at the lows of yesterday during the Powell speech, and now you have a brand new all-time high. So your line in the sand is now 654.13 on the S&P. In the event that you continue grinding higher, psychological levels should be your targets: 670, 680, etc. We're not too far away from the 12 EMA on the daily, and also we are not truly in daily overbought conditions, so the market indeed can grind a bit higher in the event that you take out yesterday's low. Sadly, that will be forfeiting the daily uptrend, and you might just be looking into a bit of weekly consolidation, but the bulls have a lot of space to work with here. Gorgeous weekly uptrend still running for the bulls right now, and the line in the sand right there is 634. That is also your clearest horizontal next line of support with the 12 EMA on the weekly. So essentially what I'm saying is the bulls control all the time frames. As a result, short-term, fast, rapid dips could be great opportunities to be buying the dip and or selling put options if that is your thing. Moving on to the QQQs currently, same analysis pretty much as on the SPY. The Qs looking very good, very solid daily uptrend with a new daily higher low being set at the lows of yesterday's trade. Now the line in the sand remains 584.30, so if you keep pushing higher, guys, 600 psychological, of course, is going to be the next target. In the event that you unwind and cut this low and evolve into a daily downtrend, you guys know the drill. Same concept as the SPY. Who is in control of the weeklies? Well, definitely are bulls still, right? A lot of space off the lows right now. The weekly lows 560 into a horizontal support area, and shortly before we do hit that, we got the weekly 12 EMA, which the bulls have really done a great job of protecting essentially since we've recovered from those April lows. So a lot of space to work with, and there's a lot of intra-sector rotation as well, right? Not every day is a big tech day. Sometimes it's big tech, sometimes it's software, sometimes it's only the biggest players in semis, sometimes it's all semis. So you're having some intra-sector rotation amongst technology, which makes sure that there's always some plays to look out for, even if you are tech focused. Moving on to financials right now. Financials not with the best day in the world, but it was a green day. That market was fairly mixed, as we saw in the heat map. Visa, MasterCard down, but the banks doing well and some of the insurance companies doing well. However, the financial data segment having an ever so rare multi-percentage decline day. It is very rare, guys, that you ever get to see SPGI and even Moody's Corporation down 5 and 6% plus. Extremely rare to see that. So they are indeed buying opportunities, and we will take a look at that towards the end of the video. They are going to be some of the longer dated winners in terms of the interest rate cut path, because I'll remind you, SPGI and Moody's Corporation provide debt credit rating, right? So whenever you're a company that needs to raise money from the capital markets, well, obviously you will need to have your debt rated. And as interest rates come down, you would expect a lot of more companies to be in the market to possibly issue more debt, take on more debt, and have their debt re-rated and or refinanced. So it'll bring a tremendous amount of business to SPGI and Moody's Corporation. over the next 2 years, but it will be a slow but probably certain play. So I am interested in buying the dips, at least in the short term, if we want to build out that whole value-oriented side of the portfolio. I mean, the growth metrics for those companies are good, but they're not high-flying tech names, right? So that being said, in terms of financials, very clear daily uptrend right here. Line in the sand remains the lows of 2 days ago. Oops, excuse me. You're talking about 53.30 right there, which kind of lines up into our previous peaks, right? A little bit of a nice support area down there, and the bulls remain in full control of this daily time frame, looking very attractive. I'm also looking for some back tests from the banks. If JP Morgan can casually come back down here and test 305, low 300s, it might be a nice new re-entry opportunity just for some continuation on the swing trade longs. Weekly chart for financials looks very strong, still in a very nice weekly uptrend. Nothing much to see there as well, but the best company, in my opinion, in financials right now is still Visa, 340 to 330. Nothing wrong with this company, and has been consolidating several times in this level over the past 6 months. So whenever we have the S&P pushing higher, but the Visa Corporation diverging from that S&P performance, whereby it usually does not, that is what I like to call some very positive divergence in which we can participate and build some positions. Moving into healthcare right now, healthcare is still doing a whole lot of nothing, kind of trapped in this level, so no clear price action. The clearest price action is going to be on the weekly time frame. We are really consolidating above all of these highs, right? All of our previous 137 highs, which are now our resistance lows. For the past 4 or 5 weeks, we've been consolidating at the top end of this move. Looks like a bull flag to me, and you might just be looking for that nice leg of expansion. Healthcare is still one of the most oversold sectors and one of the cheapest sectors in the market, and I'm still a big fan of playing this one for some possible upside into maybe the low to mid 140 range. Moving on to semiconductors right now, a massive day for semiconductors, a lot of names positive, except for AMD and Broadcom, but we had NVIDIA here, and then we had everything else. Intel's 22% day definitely helped, but you can see a lot of the bullish action today was, well, in NVIDIA, but not Broadcom, not AMD for once, but a lot of the other plays coming live, right? Micron continuing its massive rally, Qualcomm coming up a little bit, and then some of the names that just have not been getting much love, MPWR, on semi, names of that nature really helping to carry the overall semiconductor landscape today. So fantastic breakout, continuation of the nice daily uptrend by the bulls. Your new daily higher low is set at the low of yesterday, 301.63. And as a result, you guys know the drill. Any higher, any lows, looking for a new higher low for possible further trend continuation, looking very, very solid. And even if for some which reason we start unwinding this, you guys know exactly what we'll be looking for at that point. You got the nice breakout out of these highs right here, which was 295 to 300, gorgeous weekly uptrend. You would just be looking for a nice breakout retest trade for some possible further swing trade longs. So very attractive. There are still a few companies in semiconductors that I'm interested in, and we're going to talk about those towards the end of the video when we look at the individual names that I cover on a daily basis from the big tech list, because there's one that's still attractive to us right now, 2 as a matter of fact, and then on the flip side, there's possibly some other ones buried within, so we'll take a look at those at the end of the video. Moving on to the Russell right now, the Russell up 2.5%, very strong day, and we were saying yesterday after the rate cut announcement, probably a decent time to position in the Russell, but leave some room to possibly DCA in the event they go for the full back test. But, you know, whenever you get the rate cuts, that usually does favor a lot of the names in the Russell. So that being said, daily uptrend right now is clear as day. New higher lows are set at the lows of yesterday and Tuesday, 237 to be specific. Any pullback looking for a higher low for possible further trend continuation. Until you lose the pattern of higher highs and higher lows, you will not go into weekly consolidation, which is why I was saying, yeah, yesterday, not a bad day to position, just to not miss out, but always leave some room to DCA into the actual backtest location, which would be a revisit of support down here, 232 down about 235. Not too bad at all. I mean, we have broken out and we are now at new all-time highs for the Russell. However, this one hasn't done much in the last 4 years still. So there might still be a lot of juice left on the table. And I'm a fan of playing the Russell now that we have a defined interest rate cut path to kind of be playing off of. That being said, if we take a look at a few more things, such as the VIX doing absolutely nothing today, nothing to see here. When the VIX is in a low environment, you need to look for plays that are left behind and possibly explore some leap call options on them, as the volatility will be very low and the price of the stock that you should be looking at should be on a fairly decent pullback to give you really maximum upside in terms of that risk-reward profile. If you take a look at the yields here, the 10 and 20-year yields, well, they were having an uptick, and I was saying in yesterday's video after the rate cut announcement that I would not be surprised because there was that discrepancy between the 2026 market pricing of interest rates, how much and when, and the Fed's summary of economic projections for 2026. Because there's that divergence, well, we had already priced in a lot of those rate cuts so far. So now we're starting to unprice 1.5, maybe 2. And as a result, it might just be a bumpy little journey on the 10 and 20. But I do think the trend is well underway at this point in time. The 10 can be coming down further. The 20 as well can just be continuing to march down further in a weekly downtrending fashion. And as a result, I do believe that the bonds are probably, well off their lows for a while, but it might get a little bit bumpy here in terms of just setting some higher lows and going for the slower expansion that you're used to seeing with some other equities, right? But I do still believe that TLT is a decent trade with call options if you have a lot of time on them, right? 2027 type of thing. Moving on to gold right now. Gold, not a bad day on gold today. It was down about 0.43%. Now, we're looking at whether or not the bulls are going to lose this area, 3,600 roughly flat. That is your line in the sand level. So the bulls had a phenomenal leg of expansion, looking a little bit tired at the top here, but nothing much until they actually lose this support level or the daily higher low and the daily 12 EMA, which is this yellow line curling up right there. Not too bad of a day on gold, but just something to look out for. If you take a look, the RSI is currently curling over from overbought conditions. The daily MACD is curling over from very high momentum, but the bulls have not lost it just yet. It's just certain things that you got to realize, right? When the weekly candle is kind of looking like this, if we roll over and come back a little bit, not too bad. There will possibly be some more swing trade long entries in the 35, 34.50 pocket right there, which would almost be a back test of prior highs. It would not look so awkward. Matter of fact, that would be pretty attractive price action to go looking for some swing trades. If we take a look at Bitcoin right now, Bitcoin having a decent day yesterday, up 0.54%, challenging resistance 120,000 down to about 117,000 is going to be this big prior resistance range on the chart that we got to pay attention to. The daily bulls are still in full control right now, and we're looking for just continuation. If we get rejected, higher lows are here, 114,400. So if you lose them and start trending again towards the downside, well, you guys know the drill, right? What's happened recently on Bitcoin is we had a weekly downtrend with a very nice push, very nice retracement size, 61% from the bulls. So any move lower will be a bullish attempt to reset the weekly uptrend. That's if we don't just smash through this resistance right away and set it up here. I'll be a buyer again in the event we come back down here. I will be selling some put options into our support lows right down there, 108 down to roughly 100. I've been a big fan of doing this for the last couple of weeks. It's given me a ton of opportunities. And also, if we do come back down there, I'll be accumulating a little bit more. But my accumulation for now is done. You guys know what I was doing is I was accumulating MSTR at these lows, very strong support lows, and also MSTR was severely lagging in terms of the performance in relation to Bitcoin. So I was accumulating some MSTR, some MSTX, just looking to go for the eventual next leg of Bitcoin expansion that we can best view on the monthly time frames, right? Just looking for monthly consolidation for possible furtherance of the monthly time frames. Moving on to Ethereum right now. Ethereum, yesterday, not too bad, but it was just flat, right? You're kind of looking for the bullish uptrend breakout right here on Ethereum, but I do agree the price action has been very awkward in the most recent few weeks of trade. The weekly time frame kind of shows it best, right? We're just consolidating, and we're looking for the bulls to continue to expand this weekly uptrend, but we also know if they don't, we're gonna have a phenomenal area for a backtest down here. 4,000 down to 3,700 is the infamous backtest location. In terms of Ethereum, if we're holding any Ethereum from all the way back here, I don't necessarily see any reason to sell. We can keep nibbling a little bit from here all the way down into our support range, but it's pretty much gonna be kind of last chance to dance if you do want to position on Ethereum. If you see a backtest down here and you still want to play it, as long as we do have the uptrends and as long as the markets are still bullish, which for the time being they are, and we don't have any macro data to kind of derail that thesis right now, that'll probably be the next best entry opportunity for some larger positions with a clear clearly defined stop loss, which would kind of be under level, kind of targeting these guys down here, right? Looking forward to this back test. If they give it to me, I'll position a little bit heavier into BMNR, but I have been positioning a little bit recently down here in the like mid 40s, high 40s range. That was kind of the area that I was building a small, swing trade position overall. So that's everything for your market rundown. Hopefully you guys enjoyed that. Try to keep it brief. That way we can jump into tech, jump into biggest gainers and losers, and then jump into my portfolio as well. So let's move into big tech right now. So in terms of tech, you got Apple down here, 0.46% to the red. Not too bad of a day, though. Apple bulls are trying their best to go for the continuation of the daily uptrend expansion. We didn't lose it. It was very close. We backtested the bottom end of the support range. The clearest time frame for me on Apple right now is the weekly time frame chart, right? Looking good for some possible expansion. Next levels for expansion are 250 and 260 psychological. And for Apple, if you do come back here again and test the lower 220s, I will once again be selling some put options down here. Lower 220s, I do think it'll be a phenomenal opportunity to pick some maybe monthly higher lows on this chart before further expansion. iPhone 17 and other Apple products that were announced just about a week ago at this time, the pre-order numbers have been really good. So I'm expecting a nice Q3 quarter from Apple when they report pretty much in the October season. Now, of course, we won't get the iPhone 17 numbers just yet, but we might just get some decent guidance in terms of those pre-orders. Moving on to AMD right now, AMD down at 0.78%, but at one point today, AMD actually was down over 5% because of the news about NVIDIA, right? Now, the NVIDIA news specifically, I mean, we'll take a small look at it in terms of what was said. The risk to competitors in the article. The pact between NVIDIA and Intel represents a potential risk to Taiwan's TSMC. TSMC currently manufactures NVIDIA's flagship processors, a business the world's most valuable company could one day extend to Intel. AMD, which competes with Intel for supplying chips to data centers, also stands to lose thanks to NVIDIA's backing. So that's why AMD was down, but people very rapidly bought the dip because I guess they realized, well, even if NVIDIA is partnering with Intel, there's just not enough supply, right? AMD is sold out on pre-order, NVIDIA is sold out on pre-order, and this partnership with Intel is not going to be an immediate thing. Keep in mind, they're going to use, NVIDIA is going to try to integrate Intel's x86 CPU architecture into some of its data center offerings, right? So that could be very interesting. But of course, we know that AMD and Intel compete directly in the CPU market, which is why AMD was down. And as a result, it was a phenomenal buying opportunity for this stock. But not only that, to sell some put options down below here, which I keep saying, right? Whenever we get these big red days, big fan of selling some AMD puts down there in the mid 140 range. Sadly, daily downtrend right now for the bears. And as a result, your weekly consolidation leg simply continues. The bulls are playing really good defense, though. Gotta give it to them. 150 psychological. They're playing really solid defense, which is why every time it comes down there, I kind of nibble on AMD and sell some put options down there. So very strong move. All things considered, we do have a nice weekly uptrend still in motion, and the bulls are just looking to recapture this eventually. The clearest time frame of them all, in my opinion, is this monthly chart, where this is a beautiful monthly cup and handle pattern, and you might just be looking for the leg of expansion, something the fundamentals of the company do definitely support. In around 150, the valuation is still relatively low, guys, at a 1.3 peg. Moving on to Amazon right now. So Amazon also coming down on the day, but ending, only down 0.17. The bulls are trying, right? We're trying to put together a bit of a tightening range here, go for the expansion, but I know the price action has been very choppy. Where are we consolidating, though? We're consolidating kind of at the top end of this support area of consolidation, talking about 227 to 218. That being said, when Amazon is in this location, I still think it's a great opportunity for some leap call contracts, for some shares, and even for selling some put options down here in the low 220s, which is something that I did do today as well. So keep that in mind. Amazon looking pretty strong here. A lot of accumulation for arguably the past few months, setting up kind of the same thing, right? Nice almost cup and handle on the monthly time frame. We're looking for that expansion, and Amazon has been a name that's been kind of lagging behind a lot of its tech sector peers. So I am looking for that catch up over the next 3 to 6 months on the business. Fantastic fundamentals, of course. On to Google right now. Google up 1% on the day, cracking 250, closing above 252. Looking very strong on Google right now, but we know that a lot of time frames are extended, right? The daily time frame, very extended. New line in the sand level remains at 246.83. If you lose that without many new all-time highs, you're going to get a bit of a daily downtrend, and you might just start some weekly consolidation. But it will be very healthy weekly consolidation because the bulls have a tremendous amount of space. But keep in mind, the RSI on the weekly time frame here is at 81. Every time Google has hit 81 on the RSI in its history, at least over the past, 10 plus years at this point in time, it's usually been close to the top. So winding down some profits from some swing trades, not a bad opportunity, which is exactly what I did today. It hit my 250 target. I wound it down today. We are overbought on the weekly. We're overbought on the daily. I still love Google, not selling any of my shares. But swing trades with really solid momentum like this into overbought conditions, I mean, this is a historic move on Google. Google does not often get this far away from the 12 EMA on the weekly time frame, nor does it get this far away from the 12 EMA on the monthly time frame. So I'm very happy with all of my shares that I've accumulated, but I have wound down some of my leap call positions just because this was literally exactly my target. So I'm a big fan of level-to-level trading. Respect the plan that you got into when you derive the trade. When it hits your exit criteria, you might as well get out. But in terms of at 250 right now, it's still trading at a very cheap price to earnings multiple. And as a result, if Google somehow gives me another re-entry trade, possibly over the next few weeks, consolidates kind of like Microsoft did a little bit, you know what I mean, for some weeks, big consolidation to the downside, something like maybe Netflix did as well. Maybe I'll kind of accumulate a bit more Google in terms of leaps, but as of now, wound down some of the trades for some great profits. I'll show you those at the end of the video. Moving on to Meta right now. Meta, 0.58% to the upside. Finally, Meta kind of following through here on the price action. Beautiful daily uptrend on the charts, looking quite solid. The daily higher lows are still 744 roughly. So that being said, we are just looking for the continuation, possibly into the 795 to 800 psychological highs. And of course, any move lower, looking for a higher low to kind of just continue on with that trend higher. The clearest time frame for Meta, in my opinion, has always been the weekly time frame. And it's looking not too bad, right? Nice leg of weekly expansion and just looking for the continuation right now on Meta. I did have a swing trade in motion that we took down here with a exit price target of 785 to 790. I did wind that down additionally today, but I am not selling that. I'm not selling any of my shares. So today for me was a bit of a profit-taking day just because a lot of my trades hit certain levels, right? And that's pretty much all there is to it. Moving on to Microsoft right now. Microsoft down about 0.31%. Not the worst day for Microsoft, but still, the bulls are still trying to go for the new daily uptrend, something that they have not had for a better portion of the last 6-7 weeks at this point. So we'll see if they can actually get it together. The line in the sand remains 491. These lows down here, and you got a lot of space, right? This is a beautiful engulfing move. It allows the bulls to make an attempt for the trend change. Still no trend change as of yet right now. And on the weekly time frame, what they're going for here is if they get that daily trend change, you're looking for the continuation of the uptrend. However, if they don't get it done and come back all the way down here, that is just a weekly downtrend continuation. And I'll be interested in playing this one if we extend the monthly consolidation period here back down into 470, 460. That wouldn't look so awkward for Microsoft, right? 4 months of like blitzing upside, bit of a pullback here into prior all-time highs, into a 12-monthly EMA for a next leg of longs. Not too bad. That's still the trade that I'm exploring with a bit more size, but it's just not ready yet. Moving on to Netflix right now. Netflix down 1.69%. The bulls are still playing defense, 1210 down to 1185. Still haven't lost the range, and we are very tight within the confines of this price action. Pay special attention. If you do flush these lows, 1185, you're coming back down to the lower end of support. 1150 down to about 1110, and unfortunately that would be kind of a loss of the weekly upswing and potential uptrend that they were trying to go for as well, and just go for a bit more monthly consolidation, right? Is Netflix right now, and same concept as Microsoft. If I can find this one revisiting the lower $1,000 range, talking about 1100 down to 1000 into the monthly 12 EMA, might be looking to position a bit more heavier with some other swing trades in Netflix. Fantastic company right now, but just still in a consolidation phase after a historic rally from April all the way through the end of June. Moving on to NVIDIA right now. NVIDIA 3.5% to the upside after the news. So we'll take a look at more of the news. I mean, I pretty much already explained it, right? It's in terms of the x86 architecture that NVIDIA is going to kind of give a lifeline to Intel with saying, listen, you guys can help us if you really want to build CPUs for our cards, for our data center applications, but also for integration with PCs to really make Intel and NVIDIA cards integrate seamlessly on consumer PCs as well. So there's a couple business partnerships at play right here. But the news definitely helped both companies over the course of the day. The deal adds to Intel's growing reserve of capital, following a $2 billion investment from SoftBank and the $5.7 billion investment from the U.S. government. So very strong. NVIDIA just really trying to cover all bases, just trying to push their, CUDA architecture all across the globe, essentially, make it kind of like the best software integration that you can possibly have for, semiconductor AI purposes in terms of scaling GPU farms, scaling CPU endeavors as well. Just really integration with the whole CUDA landscape is NVIDIA. So big beneficiary of today's trading action, of course. And the bulls, what they're trying to do right now is we're trying to reset some time frames at the same time, right? Support level down here, 171 to 166. So as we know, right, we tried to push. They came all the way back down there. Now we're looking for the expansion. We need to crack above 180 to really get a new daily uptrend underway at this point in time. On the weekly timeframes, the weekly timeframes show a much clearer picture, in my humble opinion. We are just essentially looking for a new weekly higher low for a possible weekly uptrend continuation. NVIDIA has been a very fun name to play whenever it comes down to these lows, playing it with some short puts under, but possibly as well, I've been hinting at the fact that, building some further NVIDIA swing trades here, level number 1, and of course, down there, level number 2, these swing trades with a lot of time on them, right? Think months and months and months of time if we're using call options or call debit spreads or things of that nature. Still a big fan of playing the NVIDIA pullbacks here. And at 175, the forward price to earnings is about a 39.3 for the end of this year. For next year, it's about a mid-20s. The PEG ratio, though, which encompasses those divergences, is 1.71. Still a fairly okay valuation in my opinion. Now moving on to Tesla. Tesla up 2.12%. Let me just check on the video time. Oh, we're doing good today. Not too bad at all. Tesla down 2.12%. So, just consolidation after a massive push is Tesla right now. Good thing though, we have a nice support area below us. 405 down to about 380 is a very beautiful area for a breakout retest. Beautiful weekly uptrend breakout. If we start backtesting this location, it could be interesting for some possible swing trades, but Tesla not looking too bad at all, right? Daily bulls pushing higher. They came really hot into the RSI. If you pull back, you would be looking for the bulls to kind of defend this area right here, that whole support range that we were talking about. It's a pretty big level, right? Prior all-time highs. It's an area that the bulls used one time here to backtest before they tried for it, and then sadly we got unwound with the tariff situation. So Tesla looking good for some possible expansion here. Moving on to Palantir. Palantir with a great day, 5% to the upside. And yesterday, we were commenting there was a bit of a swing trade here on Palantir. So maybe some of you guys caught it. If you didn't, no problem at all. As long as you know what to look out for the next times, it'll just help you on the education side, right? Beautiful daily uptrend. Higher lows are set at the lows of yesterday, 161. We were saying that after a candle close like this, the entry early this morning into Palantir for expansion with the stop loss down below here and expansion into your all-time highs provided a very nice risk to reward profile. Those of you that were able to identify and take that trade as well, you must be up very nicely now. Feel free to set your stop losses to break even or keep them down there if you really want to. But the target right now for expansion is definitely the all-time highs at 190, looking very solid. And we know we had that bias. Why? Because the bulls never lost the weekly uptrend, guys. In full control, we backtested the 12 EMA a few times right here. Now looking for the possible expansion on Palantir. Short term, looking good. I am done selling most of my Palantir shares. The shares that I'm having, I'm keeping, but I have not added any shares recently as the valuation up here is, kind of like nosebleed territory, but everybody knows that, right? Palantir is all about a sentiment stock right now, which is fine, but still, as long as you understand the valuation multiples right now. Moving on to SOFI. SOFI is up 3.57% today. Very strong push by SOFI, man. Extremely strong push and a very clinical daily uptrend by the bulls right now, respecting the heck out of this 12 EMA, right? Very textbook move by SOFI bulls and the algorithms right now, really protecting the price. The new higher lows are set at 26.26, the lows of yesterday, just looking to continue grinding this daily uptrend higher. And just pay attention to the daily lows. Why are they important to identify? Because when you lose them, that is usually more often than not when you have an environment where it's synonymous with weekly retracements, right? So that being said, the weekly bulls have a ton of space. Anything above 23.78 would be looking for a weekly higher low and possibly some re-entry conditions down here for some short puts. I've been having a lot of fun, man. SoFi's been very volatile recently, and over the course of the past 3 weeks, I've been playing so many short puts in this area, 24 down to 22, not too heavily, but just often, right? Whenever they offer the opportunity, because I've been saying, down there, at the 24 to 22 level, decent valuation for where the company is going in terms of the growth prospects. At $25, the multiple is about a 9 price to sales. Now it's a bit higher, moving well into the next target, of course, which will be $30 psychological. So I'm not selling any shares. I'm not adding any shares up here. I'm just kind of like selling some put options down there. If it were to have come down and backtested this location more aggressively, I might have contemplated some leap call contracts, but I'm not going to chase this one. I have leap call contracts on so many other things. So I'm just taking the ones that I think have the best risk to reward. If SoFi pulls back a little bit more from these weekly overbought conditions and establishes a bit more solid price action on a pullback right here, maybe that's when I can participate. But if you guys have some trades, some shares from down here, I don't see any reason to sell whatsoever. The valuation is still okay. On Uber right now, Uber recovering a little bit from yesterday's decline where we had the news about the Lyft partnership with Waymo, which favors the entire industry, but obviously there's some competition there between Uber and Lyft, of course. That being said, the clearest time frame for Uber right now would be the weeklies. 93 down about $90 is your support. If you take a look at the weekly time frame right now, essentially what we're trying to do here, this is just a giant bull flag type of thing, right? You got your equal highs, you got the higher lows, so we're establishing a very nice bull flag above support, and you might just be expecting the eventual break finally towards $100. They tried to do it earlier this week. They got rejected. So if I had to take some swing trades on Uber right now, the chart is not so clean, but we were commenting yesterday that, any longs attempted in the support range, your stop loss would probably have to be below 88. And at that point, you are targeting 100 psychological. Not a bad risk reward trade, and the pattern is favorable for continuation here. Around $90, the valuation is also supportive of some nibbles in terms of longer term shares. And now lastly, moving into TSM. So TSM up 2.23% today, even though in the Reuters article, it was saying that, well, this might be a problem to TSMC in the future. Why does TSMC maybe not care so much? They just have so much business from everywhere, guys. They're not going to lose any business from NVIDIA. They can't supply enough chips. They just can't do it, right? So even if you have more NVIDIA partnerships with other players, there's just not enough supply in the market right now for the next 2 years. And the CEO of both NVIDIA and TSM and Broadcom have been very clear about that as well, and AMD as well. So that being said, TSM, very solid push by the bulls right here. Line in the sand remains these lows. 259 is the newly established lows profile right here for the bulls to protect, looking very solid for some expansion. Next expansion targets psychological numbers such as 275, 300 potentially, and the bulls now just absolutely running with it. However, in the event that you unwind this completely, we got a very nice backtest level down there. Again, this is 250 down to about 240. This whole prior resistance tops right there. In the event that you pull back with the overall broad markets, you're looking for a higher low for possible trend continuation. At 270, the valuation is kind of getting up there. At 240, 250, it wasn't that bad. 270, the last time we did it here was 230, right? So 270 over 230, it's about a 17% increase. 17% increase on the PEG ratio is not that much, but now it is a 1.64 PEG, right? It's not expensive. Expensive starts to be at 2, but it's also, you can't really say it's cheap anymore. I mean, compared to other stocks, it might be cheaper, but objectively speaking, it's not cheap anymore. Cheap kind of ended at 230, 240 in the lower sub 1.5 PEG ratio range. But right now, it's still manageable. And if I was DCAing as part of a long-term portfolio and I just buy some companies every single month, as long as the fundamentals are still good, TSM would still get my money for some nibbles even up here. As long as the company's not trading above a 2 PEG, I'm still willing to be a buyer on this company for some nibbles. but not for some full-size new starter positions, nor some swing trades all the way up here either, as we are kind of extended on certain time frames right now. That being said, that's everything I had for you guys for the overall market rundowns. Hopefully you guys enjoyed that. Now let's dive into the biggest gainers and losers section of the video. So if we have a look right here, we're going to start off with the biggest losers of the day, guys. And FactSet coming out with earnings right now, and this is a very, very awkward move by FactSet right now. They missed revenue guidance by a fraction for the forward year for 2026. They missed EPS though in terms of forward guidance by about 5%, and they also missed EPS this quarter by about 2%. So unfortunately, that was one of the reasons why the stock was down. But take a look at this chart, right? FactSet, how many times since the great financial crisis has FactSet broken its 50 monthly EMA, this red line right here, by this wide of a margin? Not much at all, right? So although this one is a falling knife, it is hitting monthly oversold territory. How often has FactSet hit monthly oversold territory since the company's inception? Never? Okay, that's what I thought as well. Weekly, how often has FactSet hit an RSI of 21 to the downside? Well, you would have to go all the way back here to the great financial crisis, at which it did not even get to 21. It only got to 24 on the weekly time frame. So this is a historical drop from FactSet, right? It was already dropping leading into the earnings. The earnings is kind of like the cherry on the sundae in terms of the flush, final flush. It is a falling knife right now. However, if you guys enjoy this company, this is part of the financial data segment. FactSet, SPGI, Moody's, MSCI, FICO, names of that nature, right? Very solid, high-quality companies with very solid business models. And if you look at FactSet, there's nothing wrong here, guys. It's a very profitable company, always has, always will be. They supply most of the financial data to institutions that are used widely across the industry for analysis. We used to use FactSet at the bank as well when I used to work there too, doing analysis. In terms of EPS, very solid, very consistent company. Revenue, very solid, very consistent company. And the same can be said about the other companies, which I'm about to talk about, SPGI, Moody's, MSCI, and even a company like FICO. So when you see historical drops like this, these are somewhat difficult to play because they're not known to be the fastest companies to move to the upside or to the downside. They just don't have the best volatility, right? So playing call options on them and things of that nature, not the biggest fan. They can work, but that's not my preferred way of doing these. My preferred way of playing these is if we have a long-term portfolio and we're looking for high-quality financial data companies with very solid recurring revenue business models. When we have oversold conditions, the likes of which we've very rarely ever seen, and we're getting time machine prices, these are the same prices as February of 2021. This is actually when I would not mind buying some shares of these companies because I do think that although it is technically speaking, a falling knife, it's a great time to be building a shares position for this company that you can keep, and you can obviously rely on the fact that you're buying an extremely high quality company with a very large competitive advantage, which is very difficult to disrupt. And the same thing can be said about companies like SPGI. So a company like SPGI very rarely has a 6 or 7% down day. Matter of fact, this is one of the bigger ones from that we've seen all year, unless you count the tariff ones, and it's just because of FactSet earnings. FactSet earnings kind of just brought down that entire segment of the market. I don't know if it triggered some algorithmic selling, but it definitely looks like this. This definitely does not look like natural selling, in my humble opinion. So that being said, SPGI, in my opinion, is a buy for a long-term portfolio, and in terms of some short-term swing trades, not quite just yet, but selling put options. The way that I like to play this one, selling put options, if you have a large account, fantastic area down here in the lower 500s, but also accumulating some shares for some longer term portfolios. Very solid company. We covered their earnings and will be one of the biggest winners into the next 2 years. It might not seem like it right away, but the theme is very clear. The tailwinds of this company are very clear as well for the next 2 years. So I want to be benefiting from these declines and acquiring some shares. Same can be said about Moody's Corporation. One of two things, either accumulating some shares for long-term portfolios and or selling some put options. Phenomenal company to sell some put options on in this whole area, 490, 480, and slightly below into the 470 location. Very solid, great area of price action. Has been the area of congestion / accumulation for the bulls over the course of the past year. Fundamentals are improving and they do have macro tailwinds over the next 2 years. So I really like every single one of these stocks that has dropped today. even MSCI here, in terms of the financial data stocks, MSCI I like, FICO I like as well. I know they haven't been performing the best, but that will not last forever, guys. They have macro tailwinds, and it's only a question of time before those macro tailwinds start really playing out into chart upside appreciation. Shout out to Visa as well. We talked about it in the introduction. One of my favorite companies right now to be selling some put options and or buying leap call options and shares as well on Visa. Visa hits my criteria for leaps. The other ones, some of the financial data names, they just don't move fast enough. And the pricing sometimes is a bit awkward. And the leaps on those are also very expensive because the share prices are very high. So not everybody can afford leaps on those companies, right? That being said, if we're looking at other names that have declined, ARM for me, I'm a bigger fan of playing almost everything other than ARM just because it's one of the most richly valued semiconductors in the entire market right now. I mean, geez, the stock trades at a 3.37 peg, and it's not even all-time highs. Look at Micron. Micron is literally all-time highs with ridiculously overbought, short-term timeframes like a daily RSI of 86, huge weekly candle move, and this one is still trading at a 0.84 peg, guys, a low forward 21 price to earnings. So, I'm not the biggest fan of playing ARM, but if I had to, right, if you forced me to, I'd be selling puts maybe 130 and below. I could probably get behind that just because of the support level down there. IBIS Energy, right? Iris Energy right here. Not too bad at all, guys. Looking pretty good. However, on a bit of a pullback, as I've been saying, if IREN chooses to come down to the lower 30 regions, again, we know these stocks are very volatile. If they pull down and go into daily or weekly consolidation, we might be looking to possibly throw some short put orders down here, 30 to like 28, just looking for a weekly higher low, waiting for this 12 EMA to kind of catch up to the price. Similar concept to exactly what happened right there, so keep that in mind. That's how I'm looking to play that one. Trade Desk is kind of a no touch from me. I know, to several people's disappointments, but really, I mean, even at 44 bucks, the valuation is getting a bit better, but they are competing against Amazon right now. So, I mean, this one, guys, is like, it's a recovery story play, let's be honest, right? Recovery story / lottery play. Not my favorite play in advertising. That would have to go to either Meta, Amazon, and or AppLovin. Trade Desk has lost a couple big clients in the last few quarters, and now it's finally, having a big impact on the company right now. I'll be fair, though. It is a nice support area. So if you're willing and patient enough to accumulate shares down here, I do believe that shares will be rewarded. This company's not going bankrupt. It's just there will constantly be this overhang of whether or not they're losing market share to Amazon's advertising marketplace that, unfortunately for Trade Desk, Amazon just charges a much cheaper fee. And that's what usually Amazon does to kind of disrupt different players. Moving on to a company like Resolve. Resolve, we talked about AI agents. If you pull back a little bit more, not a bad opportunity to be shopping $6 to $5. Then you set it and forget it, whether you use shares or leave call options. This one can keep squeezing possibly back into the, $10, $11, $12 range where it was kind of sitting after the, let's call it SPAC / IPO pricing right there. Not too bad, but it might not be as fast as people are anticipating, or maybe it will be. I don't know. This is currently a squeeze and a name with a lot of retail interest, so you got to play it that way, right? Out of the money call options, don't go too heavy. Maybe something like a $10 strike for as far out as you can possibly go, and just maybe ride the momentum, but do not ever invest in these more than you are willing to lose. And lastly, maybe we could talk about a company like Texas Roadhouse. Texas Roadhouse coming down into here to support right now. Daily oversold conditions, right? 24 on the RSI. How often does that happen? Not much, right? The last time would have been October of 2023, and it was indeed a buying opportunity. Whenever Texas Roadhouse gets this oversold and you can find an area of confluence, such as support down here, 156 down to 148, not a bad opportunity maybe for selling some put options down there. Acquiring some long-term shares, I'll leave that one up to you. The valuation is not too commanding in terms of price to sales, but if the company is not growing revenue and EPS as fast as other brands, of course, out there are, not just, restaurant brands, but I'm talking about like brands in the market. So the valuation is okay for the amount of growth that they have. It's just nothing fancy, right? It's not super cheap. It's not super expensive. It's just okay. So in the event that we wanted to position, this would definitely be the location if we are interested in a stock like this for our long-term portfolios. I do not own Texas Roadhouse in my long-term portfolio, but sometimes I do like to play the wheel on it. And for me, it would kind of be down there. Solid company to say the least. And I think that's pretty much everything out of the names that I did want to cover. Pay attention to CLH. CLH, if it backtests down here, 52 down about 46. Nice little breakout retest area for some possible swing trade longs, but maybe also some short puts into this whole support area. Not too bad. Figured I should just point it out real quick. And even booking.com. This one I am still accumulating some positions on booking.com. It hasn't really done much since the month of June, but it does have very solid fundamentals, which we saw their earnings on July 29th. Very solid, super solid free cash flow yield. This one's a buyback monster. Valuation is quite decent. It is the largest third-party travel operator on the planet. And I do believe this one is poised for some further growth. So I am, playing these pullbacks, 5,500 all the way down to 5,000 if it comes down there. Accumulating some shares, though. No call options, no trades, just accumulating some shares for the long-term portfolio. That's kind of all the ones that I want to cover to the downside today, at least the ones that I can see. Now, of course, the ones to the upside, there are many, so we'll spend 5 minutes on these. So you got Intel, of course, up 23% right now. Is this company a buy? Are you too late? I don't think you're too late, guys. The recovery story is kind of just underway. And we talked about this after the federal government positioned the company. I was saying this is the time, right? Now that you'll have a lot more attention around Intel and proactive people working on Intel's recovery story. The U.S. government trying their best to kind of help them out. The new CEO doing the best that he possibly can with the cards that he's been dealt so far. He's been doing a really good job of trying to turn around the business. And now you have the NVIDIA investment. So just attention, attention, attention. We can clearly see that there are clear efforts for the recovery story right now. That being said, you might consider the fact that you are somewhat late right now, and I would understand. However, selling some put options down here to accumulate some shares if you want them, and or out of the money leap call options, something like a $35 or a $40 strike for deep 2027. We're talking about June or December 2027. If you have a recovery thesis, you got to give it time to play out, right? So I'm not playing weekly call options on this, but if I wanted to just throw out a lottery bid here, for shares, I'd be bidding some short puts under here into support, break out of the resistance. This is going to be a massive backtest area. I mean, it's been resistance, guys, for like a year. So obviously the bulls are going to look to defend this, even if we do feel a bit of this NVIDIA news, this news gap, right? So selling puts down here, but also accumulating here and where we are right now into the lows right here, some longer term leap call options for a bit of a lottery / recovery style trade. I'm a big fan. I wouldn't go super heavy on them, but I would be a fan of kind of exploring those. And I'd be using the ever so rare out of the money call options because normally you guys are used to seeing me use in the money ones. Bullish, coming up 20% after their earnings. Phenomenal move. The only problem with this company is the valuation is still a little bit stretched even down here, but the forward prospects of the company are very solid as well. If we get a bit of a retracement down, you got bullish setting the brand new daily uptrend right now. Bit of a retracement down, possibly an area to further position or to sell some options down here in the lower $50 range. Synopsys, nice little recovery right here. Several people were asking me, can I buy the dip on Synopsys earnings? And I was saying, well, it's not my favorite company in the world, but it is a very solid company, that being said, right? Phenomenal price action right there on the lows. They backtested the 200 weekly EMA. Just going off of historical standards, it very much almost never tests the 200 weekly EMA. So when it does, it's good for a bit of a nibble. It just depends on what you guys are trying to do, right? If you're trying to swing trade it from the lows into here, well, keep in mind the next resistance range is 518 down to 484. We're coming into it now. So this would be TP1 for a lot of you guys. But if you're looking to accumulate it for the long-term position, I mean, like I said, solid company, not my favorite company, but the valuation is fair in my humble opinion. And down here is not a bad area to be accumulating such a thing. Moving on to CrowdStrike right now. CrowdStrike, 13% move. Why? Well, as of the news from today, CrowdStrike was getting a few different price targets, of course. However, they did also do something else, and I wish I could find it right here. Anyways, I'll just tell you guys. Partnership with Salesforce. Okay, Salesforce will now be offering CrowdStrike as part of their solutions and solution integrations into their enterprise resource software. Where's this darn article, man? Anyways, so many price target increases. That was the reason behind the initial jump, and a lot of analysts also coming in with some price target raises today. CrowdStrike, guys, I mean, you can't say we didn't say it on the channel, right? This entire period down here, I was saying, yeah, CrowdStrike's a buy, 200 EMA. It's been a weekly downtrend now for the past like 2-3 months. The clearest time frame, in my opinion, was the monthly. The monthly was so easy, guys. So easy. Monthly back to the 12 EMA. So easy. It was buy here and further accumulation into the bottom end of 392 to about 370. Selling puts down here was a very juicy proposition for a lot of our Discord members and myself included. And any accumulation for some longer term shares, if this is your style of company, one of the biggest and best cybersecurity players, this indeed, we covered them after earnings, right? It indeed was the area to go shopping for a little bit of CrowdStrike. That being said, right now, all buys are being rewarded. Very tough to chase the stock up here, so congratulations to everybody. No action on CrowdStrike for me right now. It goes back to a hold from a buy, and now essentially as well, no further positions for me for some swing trades, as those probably should have been taken down there. Now the risk reward is not so favorable anymore, right? On to HIMS. HIMS, very interesting, right? You just blink and HIMS goes up and down 11, 12%. So HIMS, very solid push here, 11.62% to the upside, very strong. And we were talking about this, right? They got the daily uptrend, they got this level back, talking about the whole 52.50 down to about 48.50, this whole range, right? Big resistance in the past, and this was also very challenging for the bears to get through here as well. So it was a clear area, and we were saying, yeah, HIMS can be good for a bit of a swing trade appreciation. It's now underway. I haven't sold some puts on it in, a couple weeks at this point in time. When it was down here, I was selling some put options down there, but we were also saying, in the lower 40s, it's not a bad area to possibly give this company a chance for some swing trades with some shares. We covered their valuation here around $40 a few weeks ago. We were saying, at a forward price to sales of a 4, that's not too bad, right? For a subscription service with future possible very decent margins and a very large customer base as well, not too bad, right? Even if you just use some multiple expansion for this one, 7 to 10 price to sales maybe for this year and maybe into 2027, 2028, you got a fairly nice appreciation curve for the shares. This company could at some point be a $25-30 billion company, which would be like a 2x from the current price. So congratulations to everybody who bought the dip on HIMS. I'm still holding half of the shares that I bought all the way down there. I sold half of them when they were here and never really bought back, but we did play it with some swing trades a few times. I'm happy with my profit so far, and I'll be riding the rest of my trades for the next few years, most likely. Now we got to talk about Oklo, a couple last ones here, and then we're done. Oklo, very tough to chase this one, guys. As I was saying, phenomenal company, but no revenues, right, until 2028. Very tough to chase this one. $15 billion valuation. You're pricing in a lot of growth for the next few years. The easiest one to play some catch up on would maybe be SMR. SMR, maybe accumulation in this zone down here for some shares, or whether you guys are going for some out of the money leaps, with a lot of time on them, just looking to play the theme, the narrative with not too heavy of a position, but maybe you just want something. Not the worst proposition for some short puts. I'm a big fan of playing some short puts in the lower 30 range for SMR. Not too bad of a play right there. Talking about, we already talked about MSTR, so I won't bring that one up again. We can talk about other ones that are on the highs here. MP Materials, this one is a no touch for me. It's a bit too high, but, USAR and UUU, those definitely are some possible catch-up trades here to the entire narrative landscape. These are very small companies, but we might just be getting some news on them from the government if we look to possibly expand some partnerships for some critical minerals players. UUU and USAR tend to be the ones that come up the most often in those discussions, so looking quite good on those two fronts. Now, a few more and then we're done. Oscar Health, we were saying, Oscar Health has been a buy for a while, and on these declines, selling put options. Down below here, not the worst proposition. The bulls still retain full control, right? It's been a daily uptrend this entire time. A very volatile daily uptrend, but a daily uptrend nevertheless. Bulls looking good right now, just looking to possibly expand the weekly time frame again. So are we too late for Oscar Health? Well, at this point, the risk reward, right? It depends what your trade is. It really depends what your trade is. If your trade is something like this, something like what I was going for, from the lows of this range, support range, to the highs of the support range, well, obviously at this stage right now, you're late because the risk reward doesn't make sense. If you're going for the expansion of the company over the next year, 2 years, and the recovery of the whole healthcare industry, well, then maybe your take profit is marginally higher or substantially higher, possibly closer to the $25 all the way to $30 range beyond. So at that point, you would not be too late. So which is why context always matters a lot. But if Oscar Health pulls back again, I will be selling again some short puts. I've been doing short puts on this company almost every single week for like the past 2 months. Just waiting for some pullbacks and giving myself some good distance. And I still do have my leap call options on this stock, which are performing quite well. I still enjoy this company for a bit of a risk reversal upside trade. Moving on to Circle right now. Circle up 7.16%. Circle, a very easy way to play this one is accumulating some shares for the expansion of the thesis over the next few years and possibly selling some put options down here, 120 down to 110. Very nice area of support, very nice volatility on this stock. Still a fan, and the bull and base case scenarios do lead for some expansion here into 2027. Coinbase, kind of the same thing. All the Bitcoin proxies were rallying higher. Coinbase really didn't do much of anything in the past few weeks with Bitcoin's consolidation. Now we got some catch up there. So whether you guys want to play Coinbase, whether you guys want to play MSTR, really up to you, but both names did do well today. Other names that were notable to us are some of the semiconductor equipment manufacturers. AMAT, we were commenting on AMAT after their earnings saying, yeah, not a bad proposition to be playing the wheel down here. And if you guys already had it in your long-term portfolios, because it's a very high quality company, not a bad time to be adding as well. Right? But same thing on ASML. When ASML was down here after AMAT earnings, we were saying the same thing, right? Very nice area for some swing trades, either some leap call options or some shares for the long-term portfolio, and now the rest is history. Both companies really rallying hard. ASML at this point in time, if you're looking for some swing trade re-entries, because now it's a bit tough to chase, I will admit. Very strong daily vertical move right here. If we have to pull back any, we're going to be back testing this location, talking about 878 down to 812. That would be the next area to build some further swing trade longs. If it doesn't pull back there and it just keeps rallying, well, sadly, guys, you missed it, right? But it's not my style. Especially when I've been buying these positions down here, it's not my style to just see this trade today and be like, oh, well, I have FOMO. I don't want to miss it, right? No, at this point in time, we either wait for the back test or we just congratulate everybody else if it just keeps squeezing like this to the upside because, you know, I need level to level trading essentially. If I can't get myself a good level with some good support and good clearly defined stop loss areas, I'm just not going to take the trade. I'll take something else that does present that type of opportunity. If we talk about NVO is another recovery story in line with UNH. I mean, these companies are very cheaply valued. I will be the first to admit that. But the road to recovery may be longer than the next few weeks than the next few months. It may take several quarters. But if you have a long-term time horizon, then these companies are definitely good buys at these lower levels. Even NVO here at 61 and even UNH down here at 334. Great companies for some possible expansion, but keep in mind that expansion is not going to happen as fast as some of the tech companies that you guys are used to. But some very decent longer term ads if those are the styles of companies that you do indeed want to be playing. And honestly, between you and me, guys, I think that's everything. We've done a good job of really, going around most plays right now. Shout out to Spotify as well. Spotify, very solid company. They're going for the weekly uptrend breakout right now, by the way. Not too bad in terms of some swing trades with like some call debit spreads or something of that nature. Just got the daily uptrend back. Call debit spread, stop loss here, then expansion territory, maybe 800 psychological just beyond the all-time highs, just going for the weekly trend breakout. Not so awkward, not a bad trade opportunity in my opinion, right? Shares for the long term additionally can be accumulated. The valuation is somewhat high on Spotify though. And I think that's really it. The other ones we kind of talked about already throughout the week, so I'll spare you the details of those. Shout out to Rubrik, though. Got to talk about Rubrik because I'm actually in this one. Rubrik, still a good play in my opinion, guys, down here. Lower 70s for some short puts. Good opportunity. Opportunity to accumulate some shares. I'll show you guys. I have a leap call option, though, on Rubrik. For the next 2 years, I'm looking for this company to regain some of its highs. The growth rates are fantastic, absolutely fantastic. And I think this might be one that could surprise people, the likes of which A-Lab was the last one that we kind of were calling out back here for some surprises for some people. I think Rubrik has it in themselves to kind of surprise people to the upside over the next, call it 6 to 12 months as well. That's everything though, guys, for our biggest gainers and losers section. There's many companies here. I could spend the entire day talking about them. A lot more in detail than I just did, but just to give you guys some quick thoughts, quick chart analysis where I can. Not all these companies need to be traded every day, guys. That's the point that I want to give you guys from the biggest gainers and losers section of the day. I go through a lot of the names there, but you'll notice that I'm only interested to ever trade a few. We're not looking to chase all of them, either the ones that are red or the ones that are big green. And we're also, for the ones that are red, we're not looking to play every single pullback. You know what I mean? So if I can give you guys more context and more insights as to how I look at the charts and just kind of, couple the fundamentals with the technicals, I think that'll give you guys the best, roadmap for the future for kind of trying to maybe complement your own trading styles with maybe whatever you can learn from myself. So that being said, that's everything for today's video for the market rundown. Now let's jump into some trade recap for the week, for this week for us. So I haven't done the entire weekly recap section in the Discord so far just yet, like this section right here, because I'll do that tomorrow for our Discord members. But this is the last time that I'm seeing you guys. So I figure I should recap some trades right now. Let me just move this over. Some trades for you guys that have been closed today. So a few big wins, guys. Google, we had the 165 versus 250 Leap debit spreads. We opened this way back in the day here, guys. June 24th, to be specific, at 165. We got them for $24.39, and my price target the entire time, and even I keep a position tracker here for our Discord members, my profit target the entire time, if you can see this line right here from Google, is 250 plus. Now, the reason that I closed it, quite simply, guys, is as I was labeling in this section right here, I'll bring you guys through the analysis, right? Is the same reason why I closed Micron. Here is the P&L potential for a spread. Whenever you hit the top end of your strike, your short strike, guys, well, the profits kind of slow down a lot. Either the stock has to move really substantially more to the upside quickly. You'll notice here that my max contract value is $8,500. Today, it was about $5,300, all right? That being said, I don't have that much left in terms of maximum profit. And for me to get the maximum profit, either it has to go way higher quickly, right? By like February, it has to go high 300s, and I won't even get all the 8,500 contract value, or I have to sit in it all the way through December 2027. You know what I mean? So it's kind of hard at that point in time to hold this trade when I think that I can take the capital and reallocate it to something different, possibly to make more money than I would make staying in this contract, going for the high 300s on Google, or going for the long time horizon type of thing. Just staying in the contract and just collecting premium as it comes into my pocket, right? But that is the nature of a spread. If you have a normal call option, then obviously, if you have all the way until 2027, you're not selling right now. Maybe you're just trimming, but this for me was a sell, 117% ROI, 2.17x, very solid, very happy with that, with those gains, guys. About $3,000 per contract right there, very solid gains. In terms of Micron, this one as well. Big winner, right? 240% ROI, which is a 3.4x from the entry. Same concept. It hit the top end of my strike. We had an 80 versus a 170 call debit spread. We opened this one almost near the tariff fear lows when the stock was trading around $70. Now this one as well, you'll notice here on the chart, it has a maximum contract value of $9,000. I closed it today for $5,000. As a result, what do I need to get the full $9,000 contract value? Even if Micron doubles from here, okay, and goes up to 330 by September, by tomorrow, right? I'm still not getting max contract value. That's just how a spread works because the short call is capping your gains. So I either have to have Micron do a ridiculous move to the upside to get more, or I have to wait for a long amount of time, or both. So as a result, since I've now realized a good portion of my contract, I would rather close the contract, and as I said, I still have 80% remaining ROI on this contract to go and get, either with crazy appreciation fast or time. So can I make 80% ROI on something from now until December 2027, something with more full premium? I believe that I actually can, which is why I wind these trade downs. They hit the top end of my strike, they hit the price target, and I believe I can reallocate the capital to something with more full upside baked into it. So those two trades, extremely solid. This one was a $1,400 entry, $1,480, and we closed them for $5 grand a pop. I had 1 in this account. I had 10 of those in my other account. So we're all doing well. A lot of our members had multiple of these contracts. So people are really making a lot of money on these. Very happy for our members. Additionally, earlier this week, we closed KWeb. KWeb also came into my profit target range of between 42 to 44. On the chart, you guys might remember we had been building some leap call options, you know, in around these lows, and now our price target was about 42 to about 45 bucks. Now, mistakenly, at the open yesterday, I closed both contracts. This was meant to be a, oops, I'll show you guys the portfolio after. This was meant to be a why do I keep doing that, man? This was meant to be only a 1 contract close. I have 2 of them in this portfolio, about 10 of them in my other portfolio. I was meant to only close half, and then let the rest ride into 50 to 55. But full disclaimer, I mistakenly closed both contracts. So we closed both. I mean, it was good for a first take profit. 84% ROI on those leaps. Very solid. As I said, we've been building that position since April, essentially. Not too bad. This is the second time playing KWeb right there. So all that being said, I will be buying back just to hold with the rest of the group. I'll be buying 1 of these contracts back. In my other portfolio, closed 5 of them. The next take profit target, 50 to 55 area for the China plays. Tons of time left on these contracts as well. Very solid gains there as well, though. Thereafter, we had other position closes. Meta additionally was a call debit spread. So this one, we had talked about it for a while on the channel here together. If we take a look, it was our last remaining swing trade for some small call debit spreads, $1.80 to $2.50, decent ROI, all things considered, right? And it did hit the short end of our strike right here, $7.85 to $7.90. So whenever I take call debit spreads, my take profit is usually the strikes. As a result, I'm more than happy to kind of wind that down, take profits there as well. The weekly wheel for us this week, guys, has been very attractive. Oscar Health, you can see 1 closure here. We got into it for 20 cents. Closed it for 5 cents. This was an automatic take profit order. I'll show you guys the new trades soon, but just letting you guys know that we closed a bunch of nice winners. NVIS, you remember those 75 strikes for 40 cents? Closed them for 7 cents. Very solid trade. Rubric, you guys remember the Rubric trade? 70 strike for 55 cents after last week? Well, we closed those for 20 cents. We reallocated for other things as well. It's been very good in terms of closed trades over the course of this week here, guys, right? And the trades that are still running, I'll show you. But we got some new trades today. Nike, 70 strike, next Friday, 50 cents. I like Nike in the low 70s. Amazon, new trade as well, 222 5 strike when the stock was down 0.9% today. $1.23 for next week. This trade on Amazon, very easy, guys. Same location I've been targeting, right? Low 220s. Nike, same location we've been targeting, right? Low 70s for the wheel. Not the worst trade in the world, which is why I took it. I'm actually a big fan of Nike in the low 70s. And then we additionally had AMD this morning. 140 strike for $1.22. We pretty much sniped the bottom of AMD this morning. That contract is nicely profitable. And as a result, here is the portfolio. So just to show you guys the portfolio, we were up about, close to 1% today, about 0.8, 0.9%. This is just the overnight movement of the portfolio right now. So that being said, in terms of the short puts, you'll see that we have the AMDs. Well, a lot of profit on AMDs. We opened these this morning. Amazon's, we're already up nicely on those Amazon contracts as well. We have some contracts expiring tomorrow for worthless, so 100% profit probably is in the bag. BITX 52s, BMNR 43.5s. We talked about those earlier this week. CoreWeave will be called away on CoreWeave this week. We have a cost basis right now of under 95 on these. We made some decent money on these, but that's not where the big gains from CoreWeave are going to come. The big gains on CoreWeave is going to come from this call debit spread down here. December 2027, 135 to 280. We got it for very cheap right now. We're already up 30%. There's going to be a lot of profit on this one. Looking forward to it. So these CoreWeave shares will be called away, which will be good for us in terms of freeing up capital for the wheel. Nike we spoke about. That's a new trade. NVDA will be ending worthless tomorrow. Far away from 70 at this point. Open door, worthless tomorrow. SOFI, these we opened just the other day. Well, yesterday when Powell was speaking, we got 22 bucks for them. You'll see right now they're currently up 74, 75%. Very good. And USAR as well, just coming out tomorrow. So a lot of these wheel trades, guys, are just getting out of the portfolio tomorrow, either because they're gonna be fully profitable or CoreWeave is getting called away. The only ones I'm keeping into next week, AMD, Amazon, and where's the other one? Nike. Those are the only ones, right? SOFI, I mean, I could close AMD today. I could close SOFI as well today and free up even more buying power. I might do it if I find more trades. Other than that, these CoreWeave shares are being called away soon. Duolingo is just a small little feeler position for me right now for a swing trade to the upside, but very small trade, guys, like $1,000, right? Restoration Hardware, same concept. This was always just a small position going for the furniture sector recovery with interest rates, just that segment of financing. Very small position for me, though. You'll see that I've parked most of my cash into SGOV to benefit from the nice dividend yield that it provides. The entire time that I'm not using the cash, it just stays parked in those money market funds. And some of our remaining long leap options, because we got a lot of them. Oscar Health, $20 calls, same ones we've already had, still up 43%. Sentinel One, same ones we've always had, $20 calls for 2027. Those are currently up 27%. TLT, we're still down a little bit on that one right now. XLV Healthcare, I mean, it's moving okay. We're only up about roughly 20% right now. And the other bigger long combination trades, the bull call debit spreads. AMD, we're currently down on right now by about 5%. I might throw another one here at AMD if it pulls back into the 140 range. As of right now, I'm fine keeping one. Good upside potential on that one. Full upside potential on that one. Amazon, we're still in this one as well. 42% to the upside. It's been moving nicely, but still lagging behind its tech sector peers. So I'll be keeping that one. Apparently, Interactive Brokers just wanted to log me out right here. So I guess I'll kind of just wait for them to put me back in. I didn't do anything, man. I don't know what happened, but they just logged me out. But we're pretty much done. You saw the CoreWeave one. You saw the Rubrik one as well. Maybe they're doing their server maintenance. So I guess, yeah, it's not working here, guys. So the only other ones, right, you remember is the Rubrik trade that I opened the other day, right? New leap call option, essentially leap call debit spread, 77.5 versus 140 strikes, 14.45. We're currently up small on it right now. Nothing major, but we are up small on it. Did I get my account back? No? Yes? Awesome. So that Rubrik trade right now as well, you'll see it right down here, right? We're currently up a little bit on it, but not too much. And then, of course, we just have these NVIDIA small bull call debit spreads for November. Very tiny position. But overall, guys, freed up a lot of buying power, took some juicy gains. Now we got a lot of buying power for the new batch of plays, right? So that's going to be it for this portfolio. If you guys want me to give you a rundown of another portfolio, because I guess I'll do this one a bit longer today, right? Here is the mini long term that I started with our Discord members all the way back in March, because several people were asking me, is it a good time to start a long-term portfolio during the big tariff sell-off, or should we wait for more clarity? And I was saying, no, I'll do one with you guys. Started off with $5,000. We've been adding $300 every 2 weeks to just mimic somebody who's just starting out, right? Obviously, you guys know me. I have tons of other portfolios. They're much, much, much bigger than this that I've been building for years. But this one I wanted to start it on YouTube just to show you guys, like, you can build these portfolios at any time and with your average paychecks, right? So I'm simulating somebody's average bi-weekly paychecks that we could put in the market, somebody who makes, 40, 50, 60, 70K per year. If you sacrifice certain things, right, and you focus on investing, you should be able to put in perhaps up to $300 in terms of bi-weekly contributions, right? So that being said, we've been just doing that every 2 weeks, and now we've had a total contribution amount of $8,500, and the account is up to about $11,300. We're up 40% year to date on this account, guys. And you can see that most of them are performing well, whether it's AMD, Amazon, ASML, which is a new position for us. We literally just bought it 2 weeks ago. We've been buying it for like a month. New position. We're already up 23% on that one. And Costco is another new position here. We've also been adding to this one for only the past 2 quote-unquote paychecks type of thing, right? Only bought it twice, and that one is still flat. Booking is still flat as well. That one we built a position about a few months ago at this point in time. It's just been moving flat. Everything else, though, moving nicely. American Express, great buys from March onwards. Elf Beauty, fantastic performance. Google, MasterCard, Mercado Libre as well. Meta, solid. Microsoft, solid. Netflix, and TSM. You can see the market values here. I wish I could sort them by cost basis analysis. I mean, I can. If you guys want to take a screenshot, this is when they're sorted by cost basis analysis. So you can kind of see the percentage of the portfolio. And I've sorted this one by cost basis, so you guys know how much money I put into them. If I sort them by market value, then obviously these percentage of accounts are going to be in a descending order, perfect descending order. But I want you guys to see how much I paid for the initial allocations and why I'm not doing more and which ones have more conviction when I built them initially in terms of upside, right? Or some I just didn't have enough time to accumulate them enough before they ran, such as a name like Microsoft, right? Or MasterCard. They just popped up on me. So whenever I see that happen, I mean, only have $300, right? So I'm looking for other companies that are still relatively low that I want to add to that maybe just haven't ran, as far as the other ones have so far. So just to kind of balance out the weighting, essentially, right? I don't want to keep it equally weighted, but I also don't want some to kind of just be much further than others and some that trail behind others too far. So that's a good performance on the portfolio, looking very good there. But that is everything I had for you guys in today's video. Hopefully you enjoyed this longer video today. Felt that I had to do it. We spent so much time on charts today, guys. So much time because I won't be seeing you guys tomorrow. So I'll be seeing you guys on Sunday for the top 5 options video. If you enjoyed today's video, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing if you're new. Would love to have you back. We do these every Monday to Friday after the close, except for when I'm traveling, at which point I don't do the Friday videos just because I'm enjoying the vacation over the weekend. And last but not least, guys, if you wanted to ask any questions, please feel free to ask them down below. We'd be more than happy to answer your guys' questions. In the event that you also wanted to join our Discord community to get access to all of our swing trades, participate in the chat rooms and in our trades with over 250 other members, you might consider joining our Discord community. In the community, you get access to everything. You get access to not only this little portfolio, right? The small portfolio, but my big portfolio. What am I putting in my big portfolio as well? What I don't show on YouTube type of stuff. You get access to all my swing trades in my trading accounts as well. Whether they're the wheel trades, whether they're the leap call contract trades that we've just closed for ridiculous amounts of money, right? Every single trade that I ever do across many different option strategies, you guys get access to. Here are all the trades from the last few months type of thing. Green little check marks are wins, red little circles are losses. I like to keep my wins bigger than my losses, of course, as anybody should. And that being said, you also get access to our private morning live streams every morning where we trade the markets live for about 2 to 3 hours at the open. I trade live first and then take all your questions on your stocks, your options, and your long-term portfolios. It's a great place to interact with me, ask me your questions, and I can help you with charts and with the options chain so you guys can see and put the methods to practice, essentially. And last but not least, guys, you get access to our private educational section. All the videos on technical analysis, fundamentals, different options trading strategies, the whole educational segment of our Discord, which I don't put on YouTube as well. And last but not least, you get access to my watch list. You can copy paste all my charts, all my watch lists. If you enjoy the support resistance levels that I draw and you don't want to do them yourself, and you enjoy the financial breakdowns after earnings that I do on hundreds of companies, you can just copy paste all my trading watch lists, all my charts. It takes a few seconds. As I said, if you're interested in joining our Discord, the link is down below in the video description. Hopefully I get to see some of you guys in there soon. And if not, I'll see you all right back here on the channel. That's it for me. Have a great rest of the Friday session tomorrow and have a beautiful weekend coming up. Take care, guys. Peace.